no true is not enough.
Hey guys, what's up? This is the investing course on Course Hub. What we'll be doing on this course, what I'll be teaching you, is basically what investing is. Kind of like we all know about stocks. Some of us know about bonds. Some of us know about mutual funds. But I want to dig deeper into each of those different categories. I also want to teach you how to invest correctly, what to invest in, how to hold your investments. I also want to go deeper into stocks and maybe even bonds, especially teaching you how to invest in it correctly, what tools you should be using to invest in those assets, like using the indicators, using the different kinds of charts out there, making sure that when you finish this course that you are ready to go into the real world and invest, and that you're going to make mistakes, but mistakes that don't hurt you in the long run. So let's get started. So what is investing? The dictionary definition is to expend money with the expectation of achieving a profit. It was much longer than this, but I shortened it down. Basically what it's saying is that you're putting in money to get more money, and that's what profit is. So the three most common types of investing or people investing are stocks, bonds, and real estate. These are also called assets or securities, basically meaning that they help you gain money. So investing in stocks. So we have more than what I have on the screen right now, but I will get deeper in with each video as we go on through the course. This is just like an intro video trying to get you in the mindset to, hey, we're going to start talking about investing, hitting those every specific part of investing pretty hard. So a common stock is basically business ownership. This means that if you buy a stock in this company, you're basically getting a part of their business. You own equity, meaning you own a percentage of their company. If you ever watch Shark Tank, that's what they go in with. They could say, I want an investment of $100,000 for 5% of my company. That's what the equity is, the 5%. You're basically asking them to give you $100,000, and then you'll give them 5% of your company. And that's basically what a common stock is. This is the majority of the stock market. This is probably the most important, or not the most important, but the most common, like as it says in the name, and it makes sure that it's like kind of like a baseline where you need to go from, and yeah, it is the most common. Growth stocks are part of common stocks, I would think, or at least what I understood is that growth stocks are a little bit part of common stocks, but growth stocks are basically you investing in stocks and companies that give you a lot of sales and lots of profit in a short period of time. So I don't know if you follow the market, but Tesla, before around the middle of December 2019 to the I think around the end of January, maybe in the starting of February 2020, Tesla surged up at least for $500, $600. They went from a stock price of $245 per share to around $860 per share. It might be even higher. I'm not totally sure, but that's what it's saying. That's almost like a tech company. Yeah, it's a car manufacturing company, but those are the kind of the profits or sales that growth stocks will give you. But the downside is that it's extremely volatile. Tesla, as another example for this, is that it'll go immediately down as soon as it hits a big point, and because of that, you have to be really attentive to the market and to the specific company to make sure that you're not losing money. So now we have public versus private. This is in terms of companies. So we have public companies and we have private companies. Public companies have a public market for their shares, meaning people can go in and buy stocks within these companies. So there's two separate approaches for this. You can have the more aggressive approach, which means investing in smaller or fluctuating companies. So like kind of like growth stocks, like companies that will go up really high but come down, crashing down really low. So that's the more aggressive approach. That's for more seasoned investors and day traders. We also have blue chip stocks, which are stable companies. I would like to think Apple is a stable company. Yeah, it is a tech company, but it's pretty stable. It stays at that 245 per share range. And these are like the beginners stocks that you want to invest in. Next, we have dividend investing. So, what a dividend is basically the money you get from investing in a company, the money that the company gives you for investing in them, and that's basically what dividend investing is. You're buying stocks to get that income um, from the company for you buying the stocks. On the other hand, we have value investing. These are people that invest in the company's product or whatever they sell. They are investing in that and the value of that. They buy those stocks because they believe that the product that they're selling or whatever they're selling has is appearing to be it appears to be trading for less than their intrinsic value. So they believe that the value of the company's products are actually much higher than what it is selling as currently. So private companies have no public market for their shares. Private companies, they're basically just small. They're mostly smaller businesses that try to. They're usually entrepreneurs that want to get into that business kind of mindset, into the business space, and try to make the world themselves. Next, we have investing in bonds, another type of asset. So these are also called fixed income securities. So I'll go into bonds more specifically in a later video. I just wanted to get a kind of overview of what a bond is. It's basically when you're lending money to the bond issuer for interest income. So the bond issuer can be any person from like companies to governments to the U.S. As you can see in the types, it's a secure way of investing because really you're not going to lose money in the long run. You're going to gain money in the long run. It just takes a lot of time getting there. So if you're not patient or if you're in need of money for in a really short amount of time, these are bonds are not the way to go. But if you're ready to invest in for a long term, bonds are a good way to securely invest, and they're based on the interest income. So investing in real estate is like houses basically. So real estate investing uses the investor's leverage to make money. This means that the investors are basically like developing something and selling it for profit, or they're owning something and letting others rent it, and that's how they get the money. So there's another thing called RE. You can trade real estate as stock, and the name for that is a real estate investment trust, which is REIT. So only some corporations qualify as REITs, like for example, like hotels and resorts. So basically, investors collect a share of the revenue from guests checking into hotels and resorts. So basically, when you're paying to get a hotel room or activity in a resort or something like that, the revenue that the hotel gets from that or the company gets from that, investors will collect a share of that, and that's kind of like a stock, basically, like they get the equity or something like that. Lastly, we have investing in miscellaneous. For each of these, there are actually more. I don't have enough room to put them on here, but for each of these, I will have a separate video explaining and detailing what it means to invest in each of these types of assets slash securities. I want to make sure that you understand that there is more to investing than just stocks. Stocks are not the only way to go. There's so much more out in the world to invest in. So first we have government and treasury bonds. Like I said before, they're just a secure way of investing. money market accounts. So basically, these accounts they earn interest, higher interest than savings accounts, and also earn higher yields than savings accounts, normal savings accounts. Liquid accounts meaning that you can transfer that into cash very very quickly. So that's a really good thing. That's what most investors want to see. They want to see that money immediately as soon as possible. So now next we have savings accounts or higher yield savings accounts. You can always invest in savings accounts. A lot of, or almost, I think 99% of people over the age of 18 have a savings account, or you're supposed to at least, to make sure that you have money for any emergencies or the future. But yeah, they savings accounts give you interest, and you get more money as the interest accumulates. So higher yield savings accounts, they're the savings accounts, but you get higher interest rates for deposits, so you just get more money. So yeah, that's a way to go as well. So retirement plans, these many people, older adults, they used to look into these a lot. Retirement was the plan that they were trying to go for around the baby boomer era. That's what they were going for. But the next era, what happened was that they didn't have enough money because the college tuitions, stuff like that, uh, put them in a hole already. And because of that, a lot of people are not investing in money in retirement accounts. But retirement is a really, really good thing to invest in, especially if you want to save money for your future needs, especially for any health reasons, stuff like that. We have two main plans, 401k and 403b. The 401k basically allows eligible employees of a company, it's in certain companies, to save and invest for their own retirement on a tax deferred basis. Tax deferred means tax almost tax free. On the other hand, we have a 403b plan. These are for public schools, employees of public schools, and tax exempt organizations. So like charities and yeah, basically charities and stuff like that. They're just basically retirement plans. You want to start if you're thinking about, if you're an older adult and you want to start thinking about retirement, I suggest you to go on Google, search what it means to do a 401k plan, search what it means to do if you qualify for a 403b plan. Make sure you know what it is, and because it helps you in the long run, especially with health risks and health issues or conditions. Lastly, we have owning assets. Basically, we have two types. There are more types, but these are the most common ones. We have the pooled ownership and the outright ownership. First, with the outright ownership, it's pretty simple. Outright meaning a parent, and you're just buying shares directly from the company, and you're the only one involved. This is a risky strategy because you you lose all your money, but you gain all the money that you gain. We have pooled ownerships, meaning you're putting money with many people to buy ownership of many companies, and these are usually done through mutual funds and exchange traded funds. You're just putting money in together with a group of people and buying ownership of either one company or a variety of companies. And this is a little bit more secure because you don't have to put as much money in, but you get a big chunk of the equity. But at the same time, you're outsourcing your decisions to other people, meaning that you're letting go your decisions. Like basically, whoever the person in charge is to determine how much money you put into the mutual fund or the ETF. And because of that, sometimes you're not putting that much money in, right? And because of that, you're not allowed to, or you're not able to make decisions. And so people are making decisions on based on, or making decisions for you, and that could have some disagreements or stuff like that. But basically that's it. I'm gonna go very in depth in every single one of these assets, especially stocks. I want to make a separate course actually with stocks because there's so much to know about them, especially in how to invest smartly and using the different charts and different indicators. And it's really important to know all that before you go in, because a lot of people think that, yeah, I can just put money inside a company, but a lot of the times you will lose money before you start gaining money. And I want to make sure that every single person that watches these videos is able to make the most money possible, especially when you're a first time investor. Thank you so much for watching. I'll put the channel link in the description below. Make sure that you watch all the other videos on Coursera. There's a lot more information that can be taught, and a lot of people are putting a lot of time into this channel to make sure that the people in the world can get the best information possible and can learn as much as they want. Please hit the subscribe button, hit the bell icon for notifications. Please like the video, and thank you so much for watching.